As we launch into the new year 2020, property markets around the country are generally quite buoyant, but housing affordability remains a core issue for all kinds of buyers. We've just published our new edition of the two Cheapies with Prospects reports, the City Edition and the Regional Edition, and together they make up our Cheapies with Prospects bundle, which is available at an attractive price on the Hotspotting website. And I thought today I'd highlight those areas in our capital cities where houses can be bought for below 300,000, some in the 200,000s, and in some cases below 200,000. There's three areas I want to highlight. Ipswich City in the southwest of the Brisbane metropolitan area, the Queen Anna precinct in the south of Perth, and the Salisbury local government area in the north of Adelaide. Firstly, turning to Ipswich City, a market that's been very strong in the past. Going back 5 or 6 years, if you looked for the top 20 suburbs in the Brisbane metropolitan area for long-term capital growth rates, most of them were in Ipswich City. It's been quite a long time between drinks. Since that period of high growth, the Ipswich market's been through a prolonged lull. It's been chugging along okay, and some suburbs in the last 12 months have had pretty solid growth in the median prices, but generally it hasn't been a high growth period for Ipswich City, but I think it's about to change for Brisbane generally, and in particular for Ipswich City, which is in the southwestern portion of the greater Brisbane area. A lot of major jobs nodes increasingly are in Ipswich City. Major businesses go out there that have major warehousing or manufacturing needs. The land out there is cheap. The transport connections, both road and rail, are really good. So it's a good place for businesses to set up. So the major jobs nodes out there, housing is affordable, the transport links are good. So it's increasingly a popular place for buyers of all kinds, investors seeking affordability, and home buyers, including first-home buyers seeking affordability. So there are a number of suburbs in Ipswich City that have median prices in the 200,000s, and also others that have median prices in the low 300,000s, keeping in mind that a median price of, say, 310 means that half of all sales are lower than that. So a suburb that's got a median price of 310 or 315 means that there's a large number of houses selling in the, say, high 200,000s. Examples include Goodna, well-located suburb with a good supply of older houses on large blocks, so it's not a bad place for home buyers and investors to look. Median price currently 290,000. It's on the train line, it's on the motorway. Median rental yields around 6%. So for investors seeking affordability with potential for growth, and also you can find properties there where there's the potential to perhaps subdivide or build an extra dwelling because the lot sizes do tend to be large. Median price 290,000, median yields 6%. Leichhardt, median price 255,000, median rental yields above 6%. And suburbs in Ipswich City that have median house prices in the low 300,000, say 310, 320, Bundamba, North Ipswich, Raceview, Redbank Plains, Silkstone, which is 305, and they all tend to have rental yields somewhere between 5 and 5.5%. Those areas also have mostly low vacancies. One or two of the postcodes of Ipswich City have vacancies around 3%, but mostly they're somewhere between 1.5 and 2.5%. So quite tight rental markets. Rents are strong, there's plenty of rental demand, and prices are attractively low both for first-home buyers and investors on a budget. So that's one of the options that's available for buyers of all kinds seeking affordability, the Ipswich City precinct in the southwest of the Brisbane metropolitan area. We turn to Perth. Perth is a market that's been through a prolonged downturn. There's been really no sustained growth in prices in any part of the Perth market for the last, say, 5 years. Going back to 2012-13, Perth was actually a national leader on price growth, but then the resources investment boom, that unprecedented boom in the mining sector came to an end, and that severely impacted the Perth market. It's been in gradual decline since then. We're now starting to see solid signs of that turnaround. We actually saw some about 12 months ago, and then the federal election put the kibosh on what appeared to be a recovery in the Perth market. So now it's on the way back again. We're starting to see the first signs of price growth. Vacancies have come down a lot. So 18 months ago, they were 4%. Now they're around 2.5% as an average across the Perth metropolitan area. Because prices have been in steady or gradual decline for the last, say, 5 years, pricing is pretty attractive. So investors and home buyers looking to take advantage of an opportunity, buying when competition isn't at particularly high levels in that market, pricing is attractive ahead of the growth that appears to be now starting to come into that Perth market. Now the Kwinana precinct, that's the Kwinana local government area in the south of the Perth metropolitan area, has a lot of prospects for people to buy affordability. Prices have dropped a lot there, but the conditions are now in place for that market to start rising again and attract first-home buyers and investors on a budget. Several suburbs there have median prices in the low to mid 200,000s, and the suburb of Medina, the median house price at the moment is 195,000, and its median rental yield is above 7%. Most of those suburbs have rental yields, the medians that is, of around 6% or 6.5%. Median prices, Callista's 245,000, Leda 245,000, Aurelia 230,000, Parmelia 255,000. It's real first home buyer country. It's on the train line connecting to central Perth. It has good infrastructure, a major town centre with major retail, plenty of schools, close to major jobs nodes as well, and in between the big industrial areas that provide those jobs nodes, which tend to be coastal, and the residential areas. There's large green space buffer areas, including golf courses and other green space areas. So it's quite nicely set up. It's got a lot to offer for people on a budget looking for value for money buying, and investors looking for affordable purchases with high rental yields. And vacancies, well, as I said, Perth, 12-18 months ago, we still had very high vacancies, but they've come down steadily. The Perth average is about 2.5%. And this precinct that I'm talking about, the Kwinana precinct, has vacancies. One postcode's 2%, and another postcode that makes up this precinct is 2.5%. So all the ducks starting to fall into line for that market to start reviving, and people are looking for cheapies with prospects. This one really does fit the bill. And the third area I want to highlight is in the north of Adelaide, some of the most affordable buying anywhere in capital city Australia. Lots of suburbs with median prices in the 200,000s. Two local government areas in particular, the Playford and the Salisbury local government areas. They do tend to be, in some cases, very down market areas that are stigmatised by that. But nevertheless, there are areas that present really good value for money buying, cheap prices, good rental yields, and very, very low vacancy. So I just want to highlight the Salisbury, the city of Salisbury local government area in the north of Adelaide, because one of the prime markets we look for is low vacancies. When vacancies get really low and rents start to rise, prices are generally going to follow. And this is particularly the case for the Salisbury local government area in the north of Adelaide. There are 2, 4, 6, 8, 9 postcodes that make up that local government area, and they all have vacancy rates below 1%. One postcode is 0.4%, a couple of others 0.5%. That's about as tight as rental markets can get anywhere in Australia right now. So that's driving rents up, and prices are starting to follow. Some of those suburbs have had sort of moderate to solid price growth in their medians in the last 12 months, up sort of 5%, 7%, 8%, and one suburb, Burton, is up 10%. So we're starting to see prices growing in response to that tight rental market. As I said, it's often a precursor to price growth. So in this local government area, we have the suburb of Salisbury itself, which is well located, good infrastructure on the train line, close to major jobs nodes, including the Edinburgh Defence Facility, which is the largest defence facility in Australia, I think. 295,000 median price, Salisbury North 235, a number of others, median prices in the low 300,000. Elizabeth Park 210,000, very low. and they all tend to have median rental yields 5.5% or above. Salisbury North is 6.5%. Elizabeth Park is 6.7%. So it's another area. The three areas I've highlighted: Ipswich City, southwest of Brisbane, Kwinana Precinct in the southern portion of the Perth metropolitan area, and the Salisbury local government area in the north of Adelaide. They all have good supplies of housing with prices in the 200,000s and high rental yields, and in most cases very, very low vacancies, particularly that Salisbury local government area in the north of Adelaide. That's a very, very tight market, and they've got a lot to offer: attractive pricing, proximity to major jobs nodes, transport links. It sort of ticks a lot of boxes if you can get over that stigma that some people apply to it of being down market. There's still, you can look beyond that, you can find some great value for money buying, good investing with prospects for future capital growth. So these and other locations are highlighted in our Cheapies with Prospects bundle, the city edition, the regional edition. You can buy them together in a bundle at a reduced price from the hotspotting.com.au website. That's it for now. That's Hotspot of the Week for the 7th, the 7th of January 2020, the new year and indeed the new decade. Look forward to speaking to you all again very soon later in the week.